Hi, and thanks for watching. This is a year-end market update 2014, as well as your first quarter preview for 2015. My purpose for this video here today is to review some of the activity we've seen in 2014, as well as give you a quick peek into some of our outlooks as we move into the new year. 2014 was quite a year in the markets. The volatility definitely returned to the marketplace this year as we saw some very wide swings in the market throughout the year. There was a lot of speculation about monetary policy in the economy as far as when the Federal Reserve would raise interest rates. As we know, interest rates have been at historic lows now since 2009 after the financial crisis. And as the economy grows and expands, it's the job of the Federal Reserve to decide if and when to increase interest rates to keep up with that growth. There was a lot of speculation that they would do that in 2014, and it has not happened. We don't foresee that interest rates will be increased until the mid to later part of 2015, but nonetheless, the speculation will continue until that time comes. We will keep a very close eye on this situation as it develops. We did see a lot of geopolitical risk this year, whether it was Russia and Ukraine and their conflict, or Iran, Iraq, Syria. There was quite a lot going on in the world, and the markets tend to pay very close attention to these events, as do we. Right now, there seems to be peace on all fronts, but we don't know how long that'll last, so we will keep a very close eye on the situation as it develops. We did see a small scare in October with the Ebola virus making its way from Africa here into our continent. While it was very contained and there was very few cases reported, the news tends to drive these types of events, and there was a hysteria created around this event, which did affect the markets for a very short period of time. We saw numerous small to medium-sized corrections in the markets this year, corrections characterized by the market pulling back by greater than 5% at any given time from peak to valley. We saw a 6.5% decline in January of 2014, a 5% decline in July. We saw a 9.5% decline in October of 2014, much of that centered around the Ebola crisis and the coverage on that news event. And then another 5% decline in December right before we closed out the year. All in all, with all things considered, the Dow Jones finished the year up 7.5%. We do think that as growth picks up in the economy, the markets are still poised to have another good year in 2015. Interest rates are still at record lows, and we foresee them staying there for some time. In our estimation, the Federal Reserve probably will not even consider raising interest rates until June, the earliest. And at that time, we think that they will evaluate the economy and make a decision that's more prudent at that time. We also are seeing a very interesting activity in the oil markets. Oil has been precipitously falling in price for some time now, and we actually see this as a benefit to the individual consumer, almost an unintended stimulus, if you will, as people continue to fill up their fuel tanks and realize that there's a savings each and every time they visit the pump. We foresee a lot of this money making its way back into the economy, perhaps into different retail or manufacturing establishments. Those are the industries that could very well carry this economy higher and forward in the future. For 2015, as far as our outlook is, as we're now in this new market year, we do think the volatility is here to stay. We think this is a very healthy function of the market, nothing to be too concerned about, but we do expect to see these wide swings in the market, both up and down, as we move throughout the year. The Federal Reserve, while we are watching their monetary policy, at this current time, interest rates still are historically low, and they haven't moved them yet. This is a very positive indicator for both consumers as well as businesses, as they're able to obtain both cheap and accessible financing, whether it be for home mortgages or on business ventures to help grow individual businesses. We see that as a positive for the economy as we continue this expansion from the 2008 recession. We do think there's a possibility that the Keystone Pipeline can be approved this year. Again, that is a pipeline that will travel from Canada through the United States. There is a lot of benefit there for Canadian energy companies, but we see it also as a positive here in the U.S., as mostly as a job creator, and it can also contribute to lower energy prices. So again, as we move into 2015, we're very constructive on the markets. We do expect another positive return this year. That does not mean that there won't be headwinds along the way. There always will be headwinds with the financial markets. And as you know, we will keep a very close eye on these situations, whether it's in Europe or here domestically, and we will take the appropriate action as those times approach us. If you have any questions of the information contained in this video, I would encourage you to give me a call. I'd be happy to talk with you about it. If you want to reach me online, my email is mike@desepoliwealth.com. And please, we would encourage you to visit our website. We've made some changes to the website. We're very proud of it, and we'd love to have some of your feedback. So again, thanks for watching this market update, and we hope to see you soon.